All right, so let's get started with exercise 3-3, the high-low method. So our first required is using the high-low method, estimate the fixed shipping expense per month and the variable cost of each shipping unit. Okay, so we have two deliverables here. We need to estimate the fixed shipping expense per month and the variable cost of each unit. So the high-low method, if you remember, so the first step we have to do is we have to establish our highest level and our lowest level data points. So here our data points are the months of the year, and in each one we have a different number of units shipped, and we have a different number of total shipping expenses. So looking at my list, if I'm looking for my lowest level, I think that is going to be here in August. So our number of units shipped was 1, and our total shipping expenses was 1,200. And going through my list and looking for the highest level, I can see that was in June, where I shipped 8 units, and my total shipping expenses were 5,400. So we're going to use this data to pull out to calculate our high-low change. So now that we've highlighted what our highest and lowest activity levels were, we can start to fill in our high-low method equation. So as you can see, we're always going to look at our two data points. You're always going to put your high activity level first. So in this case, it was June, and then our low activity level, which was August, and you're going to subtract the low activity from the high activity. So you're always going to end up with a positive answer. So that's good. You know you have the stacked in the right order if you're getting a positive number. So if we look at this, so for our activity level first, in June, so we had a number of 8 units shipped, so we brought that here. In August, our low activity level, we had 1 unit shipped, so here. So the difference between the two of them, or the change, is 7. And then if we look at our shipping expenses, or our total cost, in June, our high activity level month, it was 5,400. So we bring down our 5,400 here. In our low activity level month of August, it was 1,200. So here's our 1,200. If we do 5,400 minus 1,200, our change in shipping expenses is 4,200. So our total change in units is 7, and our total change in shipping expenses is 4,200. So now we can use this to first find the variable cost of shipping each unit. So using this change, we can figure out our variable cost, like I said. So our formula for this is our variable cost is going to be our change in cost divided by our change in activity. So using the information we took above, we can see that our change in cost was this 4,200, and our change, or the 4,200 that comes up here, and our change in units shipped was 7, so that comes up here. So 4,200 divided by 7. So we know our variable cost per unit is going to be 4,200 divided by 7, which is $600 per unit shipped. So that is the answer to our first part. The variable cost of shipping each unit is going to be $600 per unit shipped. And so once again, we can use the information we just found, that $600 per unit shipped, to figure out our remaining question, which is the estimated fixed shipping expense per month. So looking for this estimated fixed shipping expense per month, we're going to use the same information. So we're going to pick one of our data points up above to fill in our information. So let's say we went with the June high information. So here we have our total cost in June, which we know was our 5,400 up here. So we're going to fill that in. We're going to take away our variable cost elements. So if you remember our formula before we get too far, our total cost is going to equal our fixed cost plus our variable cost. And we know our total variable cost is our variable cost per unit times the number of units we're looking at. So if we're looking for our fixed cost, here, we're going to want to take our total cost minus our variable cost portion. So here you can see as we said, we have our 5,400 total cost, our variable cost. So looking at June for the 5,400, our variable cost, our variable units were 8. So we're going to have 8 units here. So we have 8 units from our data point. We know from over here, we found out our variable cost per unit was $600 per unit shipped. So we're going to multiply our variable cost per unit of $600 times our 8 units to get 4,800. So that represents our total variable cost at this data point. So for 8 units shipped, our total variable cost is 4,800. So to figure out what our fixed cost element is, we'll take our total fixed cost of 5,400 minus our total variable cost of 4,800 to get our total fixed cost of $600. So this is the answer to our second part of the question, or really the first part. Our fixed shipping expense per month is $600. So our second requirement is to express the fixed and variable components of total monthly shipping expenses as a cost formula. So our cost formula is going to be our total cost, Y, is going to equal our fixed cost portion plus our variable cost, which is broken out to our variable cost per unit as B, times our number of units as X. So using the information we have above, we have our Y, so that's our part of our formula. So this represents our total mixed cost, is going to be our fixed portion A. So in this case, we figured out that our fixed cost element was $600. So it's going to be $600 here is our A, plus our B, which is our variable cost per unit. So as we figured out up here, our variable cost per unit is going to be 600 per unit times our number of units. So this is our total formula, is our mixed cost will be our $600 of fixed cost plus our $600 per unit shipped times our units shipped of X. And so you can see that this is going to work for example. So if we want to figure out what our total cost was in June, so we know it's 5,400, but if we import our formula, so let's say we know it's 600, that's our fixed, plus our $600 per unit shipped, and we're going to multiply that by our 8 units, so here that we shipped in June, so this is here, right, like that, and so it's going to equal our 600 plus, so if we multiply the 600 times our 8, our 600 times our 8 units, we're going to have 4,800. And so then 600 plus our 4,800 is our 5,400. And as we know, up above, that's what we had here. So the formula does work. Our 5,400 is the correct answer. So this is how you can put it into a formula. So if we want to find out for any different number of units here, so we would just change what our X was to figure it out. And this is the formula we would use. So our last requirement for this question is, if Coolit Company expects to ship 20 units next month, would you feel comfortable using the cost formula from part 2 to estimate the total shipping expense? Why or why not? So the correct answer here is I would not feel comfortable estimating the shipping cost using the cost formula from part 2. So remember that was our Y equals $600 of fixed cost plus our $600 per variable cost per unit times our units. We wouldn't feel comfortable because it appears that 20 units, so that's what they want to ship next month, would likely be outside of our relevant range for expenses. That is, 20 units is 150% more than the highest level of activity used to estimate the cost formula. So if you'll remember, when we were picking our high-low, the lowest amount we had was 1, and then the highest amount we had was 8. So the space between here represents our relevant range, all in here. So where the 20 units is outside of our relevant range, we don't know if the costs are going to behave in the way that they normally do inside this relevant range. So we would need to get more data that would include a higher number of units to be able to estimate a different cost formula for 20 units. All right, so exercise 3-4, the contribution format income statement, learning objective 3. So the Crazy Canucks is a small family-owned retailer specializing in alpine ski and snowboard equipment located in Squamish, BC. An income statement for the ski department's most recent month is shown below. So we have our income statement for the month ended January 31st. We can see we have sales of $300,000, cost of goods sold of $180,000 to give us a gross margin of $120,000. We have some selling and administrative expenses. So our selling expenses were $60,000. Our administrative expenses were $20,000 for a total of $80,000. And so our end operating income was $40,000. So we have a bit more information below. So skis sell on average for $1,500 per pair. Variable selling expenses are $150 per pair of skis sold. The remaining selling expenses are fixed. The administrative expenses are 20% variable and 80% fixed. The company purchases its skis from several suppliers at an average cost of $900 per pair. So that's a lot of information here. Let's break it down and take a look at the first required. So our first required is to prepare an income statement for the month using the contribution approach. So our first thing we always do is we're going to set up our income statement over here. As you can see, we're going to have the name of our company, the fact that it's an income statement, our title, and for what period we're looking at. So for this, we're looking at the month ended January 31st. So just an overview of our income statement. We're going to want to have our sales. We want all of our variable expenses, and when we take away our variable expenses from our sales, we get our contribution margin. Then we're going to take away our fixed expenses to get our end operating income. So as you can see already, our operating income is going to be the same no matter what our format is. We're just showing the expenses differently. So let's start first with our sales. So our sales are going to be easy. They're going to be exactly the same. So our sales over here are still going to be our sales of $300,000 here. So that's our first part done. So now we need to start looking for our variable expenses. So let's make it easy on ourselves. So first with our sales, second is our variable expenses. And so I'm going to go through and we're going to look at all of the, so in this income statement here, over here, we don't have any information of what's variable or fixed. There's no specification of what kind of cost it is, so we're going to have to try and get this information from the words down here. So we're going to get our highlighter out, and we're going to use my orange highlighter. So every time I see a variable expense, I'm going to highlight it in orange. So this first part is skis sell on average for $1,500 per pair. So this is telling me that in this sales revenue, is $300,000. Each of these skis were sold for $1,500. And so if you look down here, we can see, we can figure out from that, so skis sell on average for $1,500 per pair. Well, if we made $300,000 per sale, and each of them was sold for $1,500 per pair of skis, well then we would have sold 200 pairs total. So that's just good to know of how many units we actually sold, because it'll help us figure out our variable expenses later on. So if we see the next part, so we just read that, so variable selling expenses, the next part, are $150 per pair of skis sold. So that's a variable cost. So variable selling expenses, so we can see are $150 per pair of skis sold. So if we look at our income statement and we look at our selling expenses, you see here, so we identified that it's variable, so it'll be under our variable expenses. It is $150 per pair, and we figured out down here that we have 200 pairs total, so 150 pairs times 200 pairs is going to give us this $30,000. So that is our selling expenses on our statement. The remaining selling expenses are fixed. So we're going to skip that now because we're doing our variable ones. So now we have the administrative expenses are 20% variable and 80% fixed. So we know that at least 20% of our administrative expenses are variable. So if we look at our administrative expenses here, they are $20,000. So if you bring them over here, we have our total administrative expenses. So 20% is variable times that $20,000. Now we have $4,000 over here included in our variable expenses. So that's good. So the remaining 80% is fixed. So you'll see that I'm going to highlight this in purple. So the rest of our administrative expenses, the 80% times $20,000. So the remaining $16,000 is sitting down in our fixed expenses. So that takes care of that. That's a little hard to see actually. Let's go with a lighter color maybe. So we're going to go with this blue. So 80% is fixed. Same over here. So this has been done. The company purchases its ski from several suppliers at an average cost of $900 per pair. So the cost of the purchases, so our cost of goods sold up here is going to be $900 per pair of skis. We already figured out there was 200 pairs of skis sold from our earlier calculation. So now we know our cost of goods sold is $180,000. So now from that we got all of our variable expenses. We got our cost of goods sold, our selling expenses, which were $150 per pair we sell, and our variable portion of our administrative expenses at 20%. So our total variable expenses is this $214,000. So the only thing we have to get back to now is that the remaining selling expenses we had here. So if we go back to this line, so the variable selling expenses we figured out above were the $30,000, which is that $150 per pair times 200 pairs. So the remaining selling expenses are fixed. So if we look here, you can see our selling expenses were originally $60,000. We determined that $30,000 were variable and are included up here. And I'll get rid of this so it doesn't get too confusing. So the remaining $30,000 is sitting as our fixed expenses. So now we have everything included. All of our items have been put on our new income statement. So if we just get rid of all these highlights just so it's easier to look at, we can see we've broken out our sales of $300K, all of our variable expenses, which were $214,000 to give us a contribution margin of $86,000. Then we took away our fixed expenses, which was the remaining selling expenses, and 80% of our administrative expenses to give us a total of $46,000. So our contribution margin of $86,000 minus $46,000 of fixed expenses gives us our operating income of $40,000. So you can see that operating income is exactly the same. It's the same $40,000. Our expenses in total are the same. We've just broken them out differently for the contribution format style. So our next required is for every pair of skis sold during January, what was the contribution toward covering the fixed expenses and toward earning profits? So what they're asking for here is we want to know what was our contribution margin for every pair of skis sold. So if we look at our income statement, we can figure this out. So our total contribution margin was $86,000. So this is the amount of money that's going to go toward covering our fixed expenses. And if we cover our fixed expenses, we're going to earn a profit. So that's our first step. So our total contribution margin, total, so we'll put total is this 86,000. But we want to know it on a per unit basis. So we know already from below we had 200 pairs. So if we want to figure out our contribution per every ski we sold, we would simply do our contribution margin per unit, right, which is going to be our contribution margin total, as above, divided by our number of units. So using the information we have, we can say that this total contribution from our statement was 86,000 divided by our total number of units, which was our 200 pairs of skis. So then if we punch this into a calculator, and excuse me for not having mine ready, so 86,000 divided by 200 is going to give us $430 per unit. So our contribution margin per unit is $430 for every pair of skis we sell. This is how much we're making. So our last required for this question is, what would the total contribution margin be in a month where 150 pairs of skis were sold? And it specifies to us, do not prepare a new contribution format income statement to determine your answer. It doesn't want us to go through the whole process. There's a really easy way to do this calculation. So if you remember the formula I just said, so if we want our CM, our contribution margin per unit, equaled our total CM divided by our number of units, then we can also use this formula and rearrange it. So now we're looking for our total contribution margin for 150 units. So we can rearrange it to be our contribution margin, the total, is going to equal our contribution margin per unit multiplied by our number of units. So if we fill in our information, so we want the contribution margin, and if you remember from our last slide, our contribution margin per unit we found out was $430 per unit, and we want to find it for a number of 150 skis sold. So then our contribution margin for these skis is going to be 430 times our 150 skis. So it's going to be 64,500. So this is how much our total contribution margin will be before fixed expenses if we sold 150 skis instead of 200. So the last problem we're going to review is problem 315, the high-low method in predicting cost. So here we can see Cross-Hill Company's total overhead costs at various levels of activity are presented below. So here we have different months of the year, the different machine hours used during the months, and the total overhead costs for each one. So assume that the overhead cost above, so this overhead cost, consists of utilities, supervisory salaries, and maintenance. The breakdown of these costs at the 60,000 machine hour level activity in May, so this one right here, is as follows. So in May, our utilities, which are variable, were 48,000. Our supervisory salaries, which are fixed, were 21,000. Our maintenance cost, which is mixed, was 105,000, and our total overhead cost, as we can see here, was 174,000. So the company wants to break down the maintenance cost into its variable and fixed cost elements. So let's go see, it's a lot of information, what our first requirement is. All right, so our first required, estimate how much of the $246,000 of overhead costs, so our total overhead cost, in July was maintenance cost. Hint, to do this, first determine how much of the $246,000 consisted of utilities and supervisory salaries. Think about the behavior of variable and fixed costs within the relevant range. So what we're going to start to do is, we were given an example in the question of May, and what we knew about May is how they broke out their utilities, their supervisory salaries, and their maintenance. So using what we know about our cost behaviors, we can figure out some of the information we'll need to figure out what was going on in July. So the first thing I want to look at is figuring out our variable costs. So utilities are variable costs. So we know they're going to be totally dependent on activity level, And that means we know that on a cost per unit basis, our variable cost will remain consistent. So it doesn't matter how many machine hours we have, our variable cost per unit will stay the same. So if we know the following information, that we know the total cost of utilities in May was $48,000, and we know the total machine hours, we can figure out the cost per unit for this variable cost. So knowing this information, we can figure out our variable cost per unit. So if you remember, our variable cost per unit is our total variable cost divided by our number of units. So we're going to take our $48,000 is our total variable cost, which we know because utilities are completely variable. We're going to divide it by our number of units, which in this case is our machine hours of 60,000. So put our 60,000 machine hours. And so now we know for utilities, because they're variable, the variable cost per unit is going to be 80 cents per machine hour. So like I said before, because we know that variable cost per unit will stay constant no matter how many machine hours we use, now we can use this later on to figure out the utilities for the month of July. So now that we know our utility, we can figure that out for our other example, because now we have our variable cost per unit. We'll figure that out in the next slide. Let's look at our next one. So our supervisory salaries fixed. So this one's going to be easy because, as you know, our fixed cost, our total fixed cost is going to stay the same no matter how many machine hours we incur. So if our supervisory salaries are fixed in May and they are $21,000, that means for every single month we're going to have $21,000 of supervisory salaries. So now the next slide we're going to look at, we can figure out our total variable utilities, we'll bring forward our fixed cost, and we're going to figure out our maintenance cost, our total maintenance cost for the month of July. Okay, so now that we figured out all of our components, we can now answer the original question. So estimate how much of the $246,000 of overhead cost in July. So July, $246,000 was maintenance. So in order to do that, we want to look at all the other costs we do know. So we know our total overhead cost is $246,000. Our utilities cost we can figure out because we know it's variable. So we know that if our cost per unit, which we figured out in the previous slide, is 80 cents per machine hour, and we know that in July there was 90,000 machine hours, then we know it's going to be 80 cents per machine hour times 90,000 hours. So our total utilities is going to be $72,000. So that's our first part. Next, we also talked about how our supervisory salaries were fixed. So that means it's going to be $21,000 no matter what the machine hours. So we can just bring forward this amount. We know it's going to be $21,000. And so since we know all but one of the components, we can rearrange our formula. So to figure out the maintenance cost, we're going to take our total overhead cost minus our utilities cost minus our supervisory salaries cost. So we're going to take our total overhead cost of $246,000, which was given to us. We're going to minus our $72,000 of utilities cost, which we figured out by determining the variable cost per unit, multiplying it by our machine hours in this month to figure out our utilities for the month. And by subtracting our total fixed cost of $21,000, which hasn't changed between any of the different machine hours. So if you subtract all of these, we know our total maintenance cost for this month is going to be $153,000. So the second required for this question is using the high-low method, estimate a cost formula for maintenance. So if you'll remember about the high-low method, all we need is two different points, one higher than the other, to figure out our variable cost per unit. So that's the first part of our formula. So before I get ahead of myself, remember our cost formula is our cost equals our A, which is our fixed cost, plus our B, which is our variable cost per unit, times the number of units we have. So we want to focus first on the high-low analysis in order to find this part of the equation. We want our variable cost per unit. So from what we've done, so remember we're looking at maintenance costs, so we're going to have to look at two data points, And fortunately, we were given 2 data points because we were originally given the data points for, I believe it was May, which gave us 60,000 machine hours and 105,000 in the maintenance cost. It was already given to us. It was broken down in the question. And then in the last slide, we figured out a different point. We figured it out at the 90,000 machine hours, and we had determined a total maintenance cost of $153,000. So using these 2 points, we can do our high-low analysis. So you can see, so in July, looking at our machine hours, we had 90,000, and our low activity level, we had 60,000. So we need to find the change of 30,000. And if we look at our maintenance cost, so again, this 153,000 that we just calculated in the previous question, minus our lower activity level of 105,000, which was already given previously, we can see our change was 48,000. So if we look at our variable rate or our variable cost per unit, our formula is our change in cost divided by our change in activity. So our maintenance cost is going to go here. So here's our change in cost. And then our change in machine hours. So $48,000 divided by 30,000 machine hours gives us a rate of $1.60 per machine hour. So in our formula up here, this is going to be our B. So our B is going to be $1.60 times our activity, which is our machine hours. So we figured out the first part of our formula. So now we got to figure out our fixed portion. So now to find the fixed cost portion of our maintenance hours, we can use all the information we have above to figure it out. So we do know that our total maintenance cost at one of the points, so let's pick the high activity level point, so our total maintenance cost was 153. So that's here. We also figured out our variable cost per unit was $1.60. So if we do our $1.60 per machine hour, and in our high activity level, our machine hours are 90,000. So if we multiply them by $90,000, at this activity level, we know our variable cost portion is going to be 144,000. Because remember, our variable cost per unit will stay constant for all activity levels, so we can figure out our variable portion. And so then if we take a look at our total cost, our total maintenance cost of 153,000, and we take away the variable cost portion of 144,000, our fixed cost element has to be $9,000. So now to answer the question, so use the high-low method estimated cost formula. So we can complete our formula now. So our total cost is going to be, like I said, A is our fixed cost plus our variable cost per unit B times the number of units. So it's going to be our fixed cost element of 9,000 that we just determined plus our variable cost per unit of $1.60 times the number of units. So that is our final cost formula for maintenance. So for part or requirement 3, it says, can you express the company's total overhead cost in the form of y equals a plus b times x? So again, our formula is our total cost. In this case, they want our total overhead cost is our fixed cost plus our variable cost per unit times the number of units. So just to recap, our total overhead cost, it consists of our utilities, which are completely variable, our supervisory salaries, which are fixed, and our maintenance costs, which are mixed. So in order to make a formula, we're going to have to separate all of the variable costs and all of the fixed costs. We can figure out what should be going in our A and what should be going in our B. So if you can see here for our first, so let's look at our variable cost per machine hour. So we'd already figured out in previous requirements that the variable cost per unit, which in this case is machine hours for our utilities, remember it was totally variable, was 80 cents per machine hour. So that's going to go into our variable costs. But remember, our maintenance we just figured out also has a variable component of $1.60 per machine hour. So by adding together these 80 cents and our $1.60, our total variable cost per machine hour for the total overhead cost, not just maintenance, the total overhead cost is going to be $2.40. So that's one component. So if we look at our formula, so we have our y equals our, so we don't know our fixed cost yet. So let's put A, but for this, we know this is going to be the 240 we just calculated times X. So then let's look at our fixed costs. So if we look at our utilities, there's no fixed costs associated with them, so that's fine. Our supervisory salaries cost, so the entire portion of our supervisory salaries cost is fixed, so that full $21,000 from the prior question, so that'll go into our total fixed costs. And then if we look next at our maintenance costs, which we just figured out in the last slides, there is a portion of it that is fixed, and that fixed portion is $9,000 right here. So to get our total fixed cost for overhead, we're going to add together our 21,000 and our 9,000 to get 30,000. So our full formula written out with all of our components is going to be our total fixed of 30,000 plus our 240 per machine hour times our number of machine hours. And it's a good habit to get into is put these dollar signs so you know what's money versus what's units. I just have spared you my horrible dollar signs where I'm writing on the computer. But this is our end answer. This is the cost formula for the total overhead cost. And I'd say invite you guys to try and punch in and try to recalculate the overhead cost from earlier in the questions to see that it does work. And so our last required is what total overhead costs would you expect to be incurred at an activity level of 75,000 machine hours? So for this question, we're going to use that formula we just made. So remember, our formula for the total overhead cost was our total fixed cost of $30,000 plus our total variable cost per unit of 240 times the number of units. So if we work it out, for 75,000 machine hours, in our formula, we're going to do our 30,000 plus 240 times the 75,000, which will give us 180,000. And if we add those together, our total overhead cost is going to be $210,000. So like you said, these cost formulas, we can figure out the cost we would expect at any activity level just by filling in this formula. So that is all of the practice problems I'm going to go through with you guys today. We went through practice problems 3-3, 3-4, and 3-15. I'm going to highly recommend you guys try on your own problems 3-8 and 3-14 for your own practice. Like I said in my previous video, if you guys have any questions as you're going through these problems on anything that I did or on anything you encounter when doing the questions by yourself, please reach out to me via email and we can address them either through email, through an appointment, or in the next class. But yes, thank you guys for paying attention. I wish you guys good luck on your studies and have a great day.